So,
Okay.
yeah. So, welcome to this week's Zoom, and we'll be looking out for the DXY. This is the DXY right here, and we know what the DXY means: the strength of the dollar, showing us how the dollar has been reacting over time. So, right here, if we remember, we had called the dollar in our former Zoom classes that have been posted on YouTube. If you have chance, or if you chanced enough, you can go back and go through them to actually see what we've been looking at on the DXY. So we call the DXY to get to 9400, which will go to 94,500, and we actually saw a short on this DXY. We saw how price dropped a bit, and now we're seeing this. So after this impulsive move, we are seeing this high right here, of which we are likely going to get a push up this week on the DXY. We're likely going to get a push up this week after we've broken this structure right here. After we've broken this structure right here, and this is an impulsive move, we're just likely to get a pullback, a retracement down. This is something like this, like this, like this. We're likely going to get something like this for us to keep going higher. Then if we are looking at this on the DXY, what do you think will happen to other pairs that are dollar related? What do you think will happen to other pairs that are dollar related, such as USD, CHF, GBP, USD, and other major currency pairs? Remember, fundamentals actually drive the market. We only try to react technically to the chart. So on the DXY, I'm anticipating price after this impulsive move. This has created an area of liquidity. So I'm expecting price to drop a bit to this area of liquidity right here, taking it out and inducing sellers into this place. Then before we get a move to the upside, and maybe from this point right here, we might be looking to actually short the DXY. So for the DXY, this is personally what I am looking out for. This will now take us to our currency pairs, major ones to look out for, such as USD, CHF, which we know is a pair that is directly correlated with the DXY. It's a pair that is directly correlated with the DXY. So we'll be looking out for USD, CHF right away. Looking out for USD, CHF right away. Let my chart just load real quick. Let my chart load real quick. Oh my God, I think my network is bad. Oh. Okay, there we go. It has actually come on. So for USD CHF, same thing we're looking out for the DXY. I think I'm having a really poor network, but we're going to manage it either ways. So right here, we had this on the USD CHF. So I'm just anticipating price to get a drop. You know, there's this area of liquidity right here. We have this area of liquidity. We have that area of liquidity right here, this area of liquidity. So I'm just anticipating price to either clear it, then we move upward. If I'm to do this and make this very neat, I'm just going to pick this rectangle right here and place it here as an area of liquidity. Then I expect price to hit it, take out the liquidity, and before we move higher in price. So I'm still bullish on the dollar for this week. For this week, I'm bullish on the dollar until we should get a proper break of structure before I'll be looking to go short on the dollar. So for USD CHF, this is what I am looking out for. The next pair I'll be looking at is Euro USD. Euro USD is inversely correlated with the DXY and also inversely correlated with USD CHF. So for Euro USD, I'm anticipating this drop in as much we are still in a downtrend. we're still in a downtrend. I'm anticipating this drop down to this point, down to this area right here. I wish my chart could load for me to see what is there. But I am anticipating this drop right here before we see price move upward from here, or we still keep going down. But personally, for me, with what is happening here, I just want price to go up a bit, and then we'll get that drop, and we'll get that drop to get this drop to the downside. So for if we should make use of the traditional method of trading, such as how we use trend lines and the rest, we don't trade like that. Use trend lines and the rest. Somebody would have placed a trend line right here, or placed another trend line right here, but you see, we just trade the order flow, which is likely going to happen, but we don't do that. As price move and as the market produces clear opportunity, I'm going to be dropping this with the normal way we do our analysis, which is the order blocks and institutional way of trading. So for Euro USD, I'm just anticipating price to go up a little bit. It has created this liquidity area. It has created this liquidity area right here. So I'm anticipating price to clear it, and then we get that drop, which is about a 95 pips plus 90 pips. Then before we begin to see if price action wants us to go higher or go lower. Then the next pair I'll be looking out for is GBP USD. GBP USD. I'll be looking out for very few pairs, and for the week. For GBP USD, we can see how price has created this liquidity, and it took it out. Price has taken this liquidity out back into structure, but I am not satisfied with this, because we have this other block right here. We have this IPA right here, and right here we have the 50% of this IPA area. So I'm still rooting for price to go higher. I still want price to go higher into this area. Still want price to go higher into that area before we get that drop, either into this IPA area or into this other block. And if we should check out lower time frames, we're likely to see we still got to the IPA area. We should go to 2-hour order time frame to see if we have something there, just the IPA area. On the 1 hour, what do we have? Still same IPA. On the 45 minutes, there should be an order block around here. Yes, we've got it. That is the order block around the 50% of the IPA. Though price came close, but price didn't hit that. So I'll take this as a flag, as a liquidity inducement pattern. I'll take this as a liquidity inducement pattern. Then I'll want price to actually break out of it during the London section. I want price to break out of this point to the upside, trapping retail traders before we get that drop to this imbalance level. So for GBP USD, this is basically what I'm looking out for. Price will break out, go to the upside drop. You can see how we had this breakout, this false breakout to the upside, and we had this drop taking out, activating sellers, and now price went back up. So I want price to go in between this area, then I look for what to shorten price. This is for GBP USD. Then for GBP JPY, let's go to our 4-hour time frame and see what we've got on GBP JPY. On GBP JPY, we have this daily order block right here in which price just went through. Let's see what we have on the 4 hours. Yeah. We can mark out those points as a whole area of liquidity. And also, we can also mark out this point as another area of liquidity. Now, if we should go back on the daily time frame, we saw an order block on that daily time frame. We are going to work with that order block to see how we can capture the sniper entry right there. We have this order block right here, of which price is here to mitigate. I'm going to look out for the 50% of that order block and mark it out, and that is what we are going to be working with. Right here, we have the 50% of the order block here. So this will be my potential entry to go short on GBP JPY. So to go short on GBP JPY, I expect price to just do something like this, to go right up here, and then we get that drop on GBP JPY. Remember, in our previous Zoom, GBP JPY is currently in a ranging market. So we just have to play in between the ranges, get this touch, this touch, this touch, this touch right here, this touch right here, this touch right here, and this touch right here. So we're just playing in between the ranges before we get the major move. So right here, we are just trading in between the ranges. Then for AUD USD, we've got this right here. For AUD USD, we've got this right here. Last week was not the best of weeks because price actually moved very late into the week and we couldn't capitalize on few of the moves that occurred. So for AUD USD, we've had this liquidity area that has been cleared and this order block mitigated. So we're likely to see price drop, or if price doesn't drop, we'll see price go higher again. We'll see price go higher again to this area, then we get this kind of move and down because of this candlestick right here. Then for AUD JPY, I'll be quick, I'll be very quick. For AUD JPY, I expected price to drop from here. And with price didn't actually get to our sniper, it dropped. Then we're seeing all these candles. All these candles are showing that there's actually no strength in the market. There's really no strength on the chart. There's really no strength on the chart because there are small candles, no momentum. So, and we are currently at this point here. What is likely to happen? This is an area of liquidity. We are likely to get a push to the upside then before price drop. So these are the few currency pairs I'll be looking out for this week. If you actually have any currency at the back of your mind, kindly make use of the chat box and drop the currency pair so that I'll look into it. I'm waiting, I'm looking at the chat box. If you have any currency pair at the back of your mind. Any currency pair at the back of your mind before I take the last few. Okay, let's continue. There's none. We'll go to NZD USD. I'm just looking out for the major pairs, This is actually not our main analysis. Our main analysis will be posted on the Trade House group. So for NZD-JPY, this has been marked out already. We have this other block right here, and we have this area of liquidity. So I'm just anticipating price to mitigate the other block right here. Then we get a drop down to this low right here. So for NZD-USD, this is what I'm looking out for. Very simple. Just anticipate another block. Anticipate this move, taking out this liquidity and taking out stop losses. Then we get the drop. Then for NZD-JPY, yeah, we've got this also, and we've also got this liquidity area. So we also got this other block right here with this liquidity area here. So what do you think price might be willing to do? We might see price move to the upside, then drop after clearing out all this liquidity and mitigating this other block. Then we might get the drop, because see, this is also looking like a pair that is consolidating. Remember, we still have these areas right here. They are very valid areas. But here we'll just trade with this other block and see how price reacts to it. If price should take us out, or if price should actually respect that other block. Okay, let me look at the chart. I'm not sure if there's been an analysis of the security, but I would like a better understanding of why most of the trade hits their SL. Okay, now this is it. Your trade hit your stop loss, not because you're wrong, but because at that particular time, the market was not ready to move. You know, the Forex market is not meant to give you money. It was not created to give you money, but it was created to take from you. That's why at some point in time, the price tends to go against you before going your way. You know, when you're trading the Forex market, you're coming against the big banks, you're coming against the hedge funds and other sophisticated traders. So you just have to position yourself in a way where you have to benefit from the market. That is the main reason why we actually trade the smart money way of trading, so as to try to reduce our risk so that we can maximize our return, because trading against the banks is actually not easy. Trading against the banks is not easy. That's why you have to trade in line with them. So where you trade against the banks, your stop loss is usually their entry. And at some point in time, you can't always escape the manipulation. It will somehow in one way get to you. So Forex is a game of numbers. You don't throw all your money on a single trade. It's a game of numbers, a game of probability. So you just take your trades with proper risk management and an increased win probability. Then you see your account grow. You see yourself making progress on the chart. So I might have 3 trades hitting stop loss at a stretch. Then the third one comes and give me a risk to reward of 1 to 7 or 1 to 9 and covers for all my loss. That is how the market works. So you can't just risk so much on a single trade and expect the other one to cover up for your risk if you don't actually make the risk to reward something similar. So have I answered that? Looking at the chat box. Okay, if you have any other question, you can also drop it on the chat box. This week we'll be more active in TRDEHOUSE. This week, all right, thank you, you're welcome. This week we'll be more active in TRDEHOUSE. Last week we had so much on our hands, so we actually were not active in TRDEHOUSE to give signals and updates. And I noticed we had some losing trades. Yes, we were also affected because we take trades we send. So it's not as if you're the only one losing. We actually lost also last week because we are not really active, and price did what it did, and we lost money too. But nevertheless, that is the game of trading. You lose your win, but your win has to be greater than your losses. So for NZDJPY, I'm anticipating for price to clear this liquidity, come to this other block area, then drop. Then if not, price might push higher. Price might push higher to this area right here before we get that drop from the higher area. We are going to watch candlestick this week. We're going to watch the chart this week and try not to rush anything this week. So I'll be looking out for gold and few indices for the sake of those who make use of our YouTube channel. I've noticed some of them actually loved to see more of gold. So for gold right here, wow, we had this move. We had this distribution right here. This fake out. Gold has already told us what it wants to do for the week. We had this move here, this consolidation, then we had this fake out and the drop. And with such fake out and the drop, what are you expecting gold to do? Expecting gold to drop from that place. Expecting gold to drop from where it currently is. Because all stop losses have been cleared at this point. All stop losses have been cleared at this point. So what do you think the next thing will be for gold to do? I just expect gold to do a little reaccumulation on a lower time frame, let's say 1 hour or 30 minutes, before we get that drop down here, or before we get a lower low. Because, you know, with gold, we are currently in a downtrend with gold, in the sense that this is impulsive, this is corrective, this is impulsive, this is a swing high, this is a swing low, this is a swing high. So we're expecting a swing low. Casting our fib right here, we'll see how gold tapped the 88.6 area, taking out this liquidity. So we're expecting gold to drop to the minus 2700, which is this point right here. I'm expecting gold to drop to this point right here. Then we can actually see a potential move to the upside, because if you should look at these charts critically, you're likely to see this as a corrective pattern. You're likely to take that as a corrective pattern on gold. You're likely to take this as a corrective pattern on gold. So I'm expecting price to, I'm expecting price to drop to this point, then before we have that shoot to the upside. So the next one I'll be looking out for is US 30. US 30. US 30 right here. For those that trade indices, I actually don't trade indices, but there's something we can do about this. Using this simple smart money concept, we have this area of this equal high, and potentially the market should be coming to create another one right here, up here. We saw how price sniped this other block and dropped, but I'm not convinced with this drop because it looks like a corrective drop. And then when price is giving you a corrective drop, it's actually not a good signal, because it's as if price is likely to go up again before you get the main drop. So we might see something like this before we get the main drop on US 30. I don't trade it. I'm just going to use simple market structure and smart money concept to do this analysis. And we know we are currently at an area of liquidity, and also we have our IPA area here. So we might see price come toward this IPA area then before we get that drop. Then for US 100, which will be the last one I'll be looking out for this week. For US 100, yeah, we've been in a downtrend right here on this. We've been in a downtrend in the sense I've been trading impulse. We've been trading impulse, corrective, impulse. I'll take this as a corrective move for us to go lower. Now I'm taking it as a corrective move. What am I going to be looking out for? I'm just supposed to come to the chart and cast my fib on the chart to look for a very premium area between the 71 and 88.6. Between the 71 and the 88.6. And between the 71 and the 88.6, we have something very interesting on the 78, which is this block right here. So I'm anticipating price to actually pull back to this area before we get a drop to the minus 2700, because we are trading in line with market structure. So with this, I bring this weekly breakdown to a close. Do have a productive week ahead, and begin to expect a concrete breakdown or analysis of individual charts on the Trade House Elite group. And if you've not joined Trade House, come on, you're doing yourself. There's a lot to learn. There's a lot to find out. There's a lot to dig out from smart money concept of trading. Do well, get yourself plugged in, and see you within the week. Do have a lovely day ahead. Thank you.